AMD is one of the hottest growth stocks since the pandemic boom, with revenues surging from 45% increase in 2020 to 68% in 2021. The growth looks promising, and it's even about to take over Intel by market cap. But at what prices can we enter or re-enter the stock? Hey guys, I'm the Newb investor. Today we'll be screening AMD through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. From there, we should see if the stock is a buy or not at current prices. Through our three metrics, we can also determine the best entry prices for the stock. AMD is currently trading at $104.29 with the highest price of $164.46. That's 36.59% of the highs. Current market cap of $169.72 billion with PE ratio of 40.54. They don't give out dividends. Looking at charts, I see no other reason for the pullback but the risk associated with the growth multiples of the stock and the overall market sentiment. First metric, we want an EPS multiple lower than 3. It's 15.75. We get this by dividing the current PE by the EPS. This metric tells us how much we're paying for the stock at the basis of their current earnings. The multiple is expensive at 15.75, but is it worth paying for? I've included here the EPS history from 2017 to present and the OSN, or number of shares. It is impressive that even with this rate of share dilution, they still manage to increase their EPS. Next metric, we want to pay $1 or less for 1% of the money they're making. This is based on the lowest yield between the net income yield and the free cash flow yield of the current year and the 5 and 10-year average yields. This metric tells us how much we're paying for the stock based on their yields. What you see here is revenues deconstructed, the costs and expenses they use to make those revenues, the income they get off of those revenues, and free cash flow they generate out of those revenues. I'll show you the relationship of the sales. I've included here the revenue growth as this second metric, like all other processes you know out there, doesn't account for the loss of revenue. The company will still make the same yields even with declining revenues. That's why it is important for companies to grow or maintain their current revenues. Of the four highlighted values, I took 19.24 to divide our current PE, as their free cash flow yields are skewed due to the years when they had a loss. I took 19.24 because I'm assuming that they'll be having these yields in the future, like the common yields among the semiconductor sectors. Using this yield, we'll divide the current PE and we'll get a discount of 2.1. This means we're paying twice their yields if we buy at these prices. Third and last metric, we want to know our discount compared to when the markets have valued the stock before. I have here two historical data, one from Guru Focus, where these data are readily available, and the other from Macro Trends, where I manually took the PEs from the range of consolidation the stock has traded before. You'd see here the highs and the lows of PEs it traded and the number of quarters I took the PEs from. Of the two highlighted values, we'll use the lowest to divide the current PE and we'll get a discount of 0.67. This means the stock is trading at a lower PE now. In conclusion, the stock beats one of my metrics. The stock is overvalued as it trades at 15.75 times their earnings and 2.1 times their yields. I do not own the stock. I think paying premium for the stock is sensible as the revenues are growing. Would I buy? Not at the current prices. Here are my entry PEs, just a little lower from the yields, 16, 17, 18, with 19 as their yields. I think the fair values of the stock is around $50. This is what we get when we multiply the EPS of 2.57 and the yield in my second metric of 19.24. Here are my entry prices for the stock. and the prices with multiples. We have a high price here of $80. I don't promote using multiples, guys. I don't buy stocks at multiples. I believe that paying multiples is a big money's game. Who can dump shares extended hours? Personally, I'd rather bet on Nvidia than AMD, as AMD's financial isn't as solid as Nvidia's. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.